I'm along Interstate 26 in the exit 37 area. Check this out. Westbound and eastbound lanes of Interstate 26 in Erwin, Tennessee, covered by the Nolichucky River.
I do have a housing market update for you and some interest rate warnings, but first, take a look at some of these wild clips that are coming out of East Tennessee. Guys, this is where I'm from.
Oh, I hope not. Oh, we're gonna go up in the attic if we have to, guys. We came quick. Love y'all. The wipers are on.
What?
The wipers on that U-Haul are on.
Oh, I hope so. I wonder if somebody's... Why would there be wipers on? Probably.
I grabbed this image. This is from the Tennessee Highway Patrol. This is Interstate 26, 10 minutes from Johnson City, Tennessee. My wife and I were actually visiting family, our daughter in Johnson City last week, and we're actually on this interstate. But look at this here. This is near the town of Erwin, Tennessee. You cannot drive from Johnson City to Asheville now because the interstate is completely washed away. Also, Interstate 40 in Tennessee is also washed out. So if you're traveling to the mountains, you will need to prepare ahead of time because so many of those roads, unfortunately, were washed out.
There was a water rescue for a hospital in Unicoi. They had patients and nurses on the roof of the hospital.
At least 50 people were on the roof of the Unicoi County Hospital in Erwin. That's located at 2030 Temple Road. Crews from Tennessee Emergency Management Agency, the National Guard, and Virginia State Police all worked to rescue those people.
And for what it's worth, this is one of the most beautiful areas in America. Erwin, Unicoi, it's right in the base of the mountains. I don't know what else to say. This is stunning. I've driven these roads, I've driven these bridges hundreds of times, and to see them washed away like this is just, it's stunning. It's stunning. Shocking. Yeah. Okay, back to the housing market update. Now, you know, we've been talking about the labor market weakening, and I even mentioned last week about the layoff at Asurion, which is now being reported to be milder than what people expected. But it's really hard to tell if we're in this massive recession where rates are going back to zero and they're panicking to drop them fast enough, or are we actually looser on monetary policy than we even understand? Now, listen to this quote from Larry Summers. My suspicion is that there's some upward adjustments ahead in longer term rates, perhaps quite significant upward adjustments in the 10-year and the 30-year, he said. Now, the 10-year Treasury yields were at 3.73 when he said that. The rates that people are now seeing on mortgages may be relatively low compared to what the average of where they're going to be over the next 5 years. That is a fascinating statement. Notice he gave a medium-term time horizon of the next 5 years. 30-year fixed-rate mortgages last week were around 6.15. According to the Mortgage Bankers Association. Now, that's about where they were with Mortgage News Daily. Now, before you completely dismiss this, there are many reasons to think that yields could actually continue going up. And I've been surprised by their drop. But of course, I called all my buyers and told them, like, hey, refi, this is an opportunity. But I'm not surprised that it's actually pushing up demand. And if this continues nationally, then Larry Summers may be right. We may be hitting another inflationary cycle, and it could lead to even higher rates. Gold just hit an all-time high. Silver is skyrocketing. Ports could be on strike in the next few weeks. And look, I don't know where this all leads, but I certainly don't think that the economists, the ones that said we wouldn't get inflation, are now going to help us with what's going to happen next. Larry Summers was one of the few that warned about inflation when they were just printing money and handing it out and printing it and handing it out. He's one of the few that's not a modern monetary theorist, which is just wild to think that people actually believe you can print money, hand it out, and it doesn't have any impact on inflation. I think that's silly. But look at demand in Nashville, okay? This is contract volume for single family homes. It's up double digits versus last year. Now, last year at this time, interest rates really started skyrocketing, heading towards 8%. And demand is picking up big time as that gap between the interest rates shows just how much more people are wanting to jump out into the market. Now, what makes this interesting is that when interest rates drop, it usually slows down demand. But when they start creeping back up, which they have for the past couple of weeks, that's when people really jump in. So we are seeing demand skyrocket. Now, we need a couple more weeks at least, and the hurricane's going to show some noise in this data, but we're likely, if this continues, to see a very hot housing market next year. And I mean, it could be very hot. Now, contract price is skyrocketing as well. This means that while September could hit 470, it's about $5,000 lower than I projected. We are very likely to get a strong bounce in October. I would say at least 480. So this is 2% up, but it's still unclear. And it's not clear what happens after this. Contract price has been trending up for almost 6 weeks now. Price cuts as a percentage of active listings are no longer skyrocketing. And with the increase in contract volume, demand, it's not all bullish, okay? Active listings are also soaring, which is also bizarre. Canceled and expired listings are also skyrocketing. This is something that when they relist at a lower price. That doesn't show up in the price cut percentage. This is really a covert way to drop a price. And like I said, it won't show up in the price cut percentage here. So the demand that's increasing is in the interest rate sensitive groups. And there are also the existing homes that are going up for sale. So part of me does wonder if this is unlocking a part of the housing market that's been completely shut down this year. Now, I also took a random sample of 50 active listings. And, it's too small to be like a true statistical survey, but I think it's pretty representative of what I'm seeing out there. 50% of the active listings were empty houses. Now, to break that down, 30% were new builds, okay? New builds are empty. But another 20% of existing homes had an automatic accept for a showing, which means that you could show at any point, any time. That's indicative of an empty house, or the pictures were clearly empty. Now, I could continue to dig through these listings and it might change, but I think this rings true. Now, you tell me what you think. Are 50% of active listings empty? Give me your take in the comments below. And as always, thanks for watching. And if you hit the like and subscribe button and I ever see you in public, I will give you the biggest high five you've ever had in your life.